everybody. Happy Tuesday. Today is March 21st. Hopefully, y'all are having a great Tuesday morning. SPY is currently trading for $397.02. Currently up from yesterday with a close of $393.68. So we're having a gap up overnight for the second time. That's what it's looking like. Let's go to the daily chart. And this is on the news that the Fed, or not the Fed, but the government could be potentially looking to backstop all deposits, according to Treasury Secretary Janet Yellen as of 7:30 this morning, saying that the government could backstop more deposits if necessary in order to stop the contagion or stop the bank runs that are going on right now. So FRC, First Republic, one of the banks that everybody is worried that will have bank runs and go bankrupt, is currently up from $12.18 to currently $16. So what, $4 on top of 12? That's like 30% after being halted a bunch of times yesterday. So I could see a decent recovery out of FRC today, probably for KRE, I would imagine. Would catch a bid and go up on this news. Currently trading at 46. You might see this one go into 47 or so this morning. Currently, just fell to 45.63, but I think this one could potentially be bullish for today. On the news of Janet Yellen statement. But SPY currently trading for $397.28. I think that we'll see a pullback probably first thing in the morning, just because of the decent gap up from 397 or 393.74 to currently 397.30. But we'll have to see. The Fed meeting is going to be tomorrow at 2:30, or sorry, 2 and then 2:30. So you might see some buyers ahead of that, but the Fed is expected to do a 25 basis point rate hike as of right now, with a 82% chance that they're going to do the 25 basis point, and then only an 18% chance that they're going to pause interest rates. So this could be a sign of confidence for the Fed if they do a 25 basis points. It's not, overly tight with a 50 basis points like we were expecting a couple weeks ago, but we're still getting that 25 basis points, and the markets still expect cuts by the end of the year. But now less cuts than what I was expecting before, just down to 425 to 450 versus previously it was 375 to 400. So we're seeing a lot of volatility in the Fed futures for sure with all this bank news. So definitely something to watch out for, but we're going to get some very clear guidance from the Fed tomorrow with the summary of economic projections. So all of this should kind of stable out starting tomorrow. Looks like SPY is pushing higher to 398 almost. QQQ is lagging behind, only up 0.8%, but still at 308. Dollar index is lower again today at 103. So gold should be higher, but actually gold is pulling back. I guess it was kind of overextended. So reasonable to see a pullback, but usually when the dollar goes down, you'll see gold go up. Not the case today. And then the Treasury yields are up today, with the 10-year currently at 3.575. This is another gap up overnight, like we're seeing for SPY, coming off of 3.486 at close, or 3.481 at close yesterday. So yields are going way higher. The dollar is coming down. That's unusual. And then gold is coming down with that. VIX is also down 6.5% today to 22.50. So I will be buying my $100 worth of UVXI, as I have been every day before the Fed meeting. And it looks like my Iron Condor not doing so hot this morning. Currently down 140. I'm assuming that SPY will pull back to 396. And if we do end up filling that gap, that would definitely make this a profitable trade. But we'll have to wait a little bit for that. Going to UVXI though. Trading at 554. So way cheaper than it was over the last week. At a high of $7.18. Yesterday it was trading for $6. So I'll buy another $100 worth, which will get me, let's see, 18 shares of it. So that will bring me to a total of around 460. All right. All right. Buy alert. Just bought 100 of UVXI. So now I have a total of 462 shares at an average cost of $7.01. And my expectations for after the Fed meeting is that we're going to get that higher interest rate for the end of the year, where the markets expect the Fed to cut. I don't think that they're going to cut. And I think that the VIX will probably go to about 32 to 35. So right now it's trading at 22. So that would be, about a 50% higher, 10 on 20 to 45% higher than where it's trading right now. Good morning, Kamala. Hi, Toxic Chaos. Martin, good morning. Looks like UVXI is still pulling back some, but let's check out this Iron Condor for SPY. Currently going for 70, which is about the right price given that it's trading at 398 or $1 above where I'm expecting it to be between. And if we check out the SPY, currently we're trading at 68 for the RSI. So if you're doing just based on technicals, I would probably want to get out of this trade, given that we are bullish with 70 RSI. But given the huge gap up overnight, I think that we're going to fill part of that gap at least. Currently trading at 397.70, and we close at 393.66. So there's still a ways for us to go down. And remember that volatility works in both directions. So something that we've been seeing is, these 1% updates following one another. We were up 1% yesterday, up 1% today. But before that, we were down 1.5% the day before. I don't know about the day before, but you're going to see wild swings in both directions. So get ready for that with the high volatility. And whenever the stock market is going up, you're going to see the VIX pulling back. That's just natural because VIX is based on how many options are being traded for SPY over the next month, 30 days until expiry. If there's more put options, the VIX goes up. So obviously people are getting out of these SPY put options whenever SPY is going up because they're taking a loss on them. But yeah, SPY did end up pulling back a little bit to 397.50. So we'll see if this ends up coming down to fill the gap to 397.66. Hi, Donald. Should I trade MSTR? I haven't traded MSTR before, I don't think. Let's see. MicroStrategy. So this is Bitcoin. I would just trade Bitcoin itself personally. I wouldn't want to trade any proxy to it unless it's a company that makes profit off of it, like Riot or one of the blockchain miners, or Coinbase. Those are the only ones that I would make, but I wouldn't invest in like MicroStrategy or trade them personally. I think you can short. It depends on what trading app that you're using. I know. Let's see. Bybit. This one, you can basically do anything with Bitcoin. You can buy, sell it. You can trade spread options even. So, not sure if this is available for the American market or not. I'd have to check into it, but I do know that you can trade options on it. So, something to look into. Personally, I wouldn't want to trade options on Bitcoin just because of how volatile it is and very unpredictable. So, it is available for the American markets, yeah. So, Bybit would be a good place to buy, short, trade options on Bitcoin. All right, these are pulling back 66 each. I ended up selling them for 38, so definitely didn't get the best price for these, given that SPY ended up gapping up. I think Janet Yellen is scheduled to speak at 10 o'clock regarding the banks, so that could have a sway on the markets one direction or the other. Gold-backed ETF GLD draws $1.2 billion worth of inflows amid the banking crisis, outpaces stocks and bonds. Yeah, it's at 182, up from, 160, 170. So GLD is definitely popping right now, and that's to be expected with the banking crisis and the possibility of recession. Gold will outperform. So this is a good hedge for like long term. If you would just want to buy shares of it, that would be suitable. Or you could buy Leafs options like I did. I did it a couple weeks ago. I think it was trading at roughly 170, and I ended up getting out when we were trading at 180. So I ended up making a couple $100 profit there. Could have probably held it a little bit longer and took some more profits, but I thought the rally was getting a little bit too ahead of itself. I think the recession is still a ways out. But, if people are worried that their deposits aren't going to be safe because of the banking crisis and bank runs, then gold would be a good alternative for that. So that's why you're seeing gold doing so well. Buy UVXI, $5 cash secure put. I wouldn't want to do a cash secure put just because, you don't know if you're going to get filled on it. Let's see how much it pays. It's only $500 to buy 100 shares for $5. So how much are you getting paid for it is the question. $7 for this week. If you put the expiration date out, say a couple weeks, 15 days, you're getting paid $30 for 500. So that's not a bad deal. Let's see, 30 over 500, 6% pay for 2 weeks. I do think that volatility is probably going to pick up over the next week. I don't know about the next couple of weeks. So I think that there's a possibility that volatility just works in both directions. So it could come back down just as easily as it goes back up. So something to be aware of for UVXI. And if you're planning to hold it for a long time, I definitely wouldn't suggest that. But if you look at VVIX or the volatility of the VIX, this is still very elevated, up from 74 to currently $101, which is a gap down from 109. But considering that this is still up $30 or about 50%, that means that volatility of the VIX index is still elevated, which means that we could see a rebound in the VIX in a short amount of time if the volatility of the VIX stays elevated. Do I think we'll rally to 400 this morning? Maybe not this morning, I don't think. Maybe, if anything, I would expect it probably tomorrow before the Fed meeting. And I would think that the 400 would act as a resistance right before the Fed, just because that's getting a little bit too risky. So maybe by like 12 or 1 o'clock right before the Fed, we could see 400, but I don't think that we're going to surpass 400. Moderna wants $130 per COVID vaccine dose. U.S. health authorities warn of incurable, deadly fungal infection. Elon Musk wants, this is a lot of news, Elon Musk wants rate cuts. Yeah, no shit. He's a growth company. He's a CEO of a growth company. Why wouldn't he want 50 basis points worth of cuts? What about SPY? Yeah, so SPY currently trading at 397.48. I've got supports at 395.25, 391, 386.58. I would expect that after the Fed meeting, but right now, definitely not going to get there. And then resistance at 399.03, 400, the obvious mark, and then 401 would be the top of this week's risk range. So those are the levels that I would look out for this week. And then obviously if the Fed is more hawkish than expected, if they say that they're going to still go to 5.25 to 5.5% or higher for the federal funds rate by the end of the year, I think that this could easily go below the trend line, which for the end of the week would land us below 384.50. And currently we're trading at 397.50. So that's $13 move to the downside, or about 3% from where we're trading right now. Where will I make the most money today? I would say call credit spreads, assuming that SPY is going to be below 400. Not sure how much they're paying, but that's a trade that I would take on if I was doing a day trade. Let's see. You also have Nike reporting earnings after hours today. Given Foot Locker's earnings yesterday, I think that Nike could actually have a pretty poor earnings report. So that could be a decent put position to open. Let me see. Let me check in on a 400 call credit spread for SPY that expires today. That is currently paying 17-cent credit. It's not a lot of credit, depending on how much you're using to trade with. So if your risk, say, I don't know, 500 for the trade, you get paid. That's not right. You get paid 114. So risk reward ratio definitely not the best, but the odds of SPY going to 400 by the end of the day would be pretty low, given that the Fed meeting is tomorrow. I don't think that the markets want to take on that risk. Could also do a gap fill down to 394, I guess. Could be another trade that you can make for today. I would want to set the expiration date just a couple of days out, because sometimes it does take time for that gap to be filled. So you would do a 394 put debit spread. So buy the 395, sell the 394, and you're paying, let's see, $36 for that trade. So that's a pretty cheap trade. And that's a trade that I would actually be willing to take on too. I'd set the expiration date again for a couple days out. Just because it can take time for that gap to be filled in. I wasn't filled for the trade. Let's see. I'll have to do 8 at 36 instead of 35. It already dropped to 397.11. There we go. I get it. I did get in. So this is a swing trade that I'll take. Could end up turning into a day trade, but can't really tell yet. Depends how quickly we fall. Just opened a new SPY put debit spread expiring for 3/23, I think. 3/23. Yeah. And I got them at 36. So that's just assuming that we're going to fill the gap down that we created overnight over the next couple of days. All right. Currently trading at 397.41. That Chewy put credit spread that I opened, it's already at a profit of 18, or about 19% of the 19% of the credit that I'm supposed to get. Currently trading at 39.19, so up 3% today, whereas the markets themselves are up 1%, so it's not really too crazy, considering QQQ is up 0.7% at 308 right now. Chewy was down, I think, like 2% at one point yesterday, so that recovery was kind of just a rebound to the average for the last couple of days. A little bit above the average, but yeah. And then that Nike trade, I actually took a Nike trade on the downside after seeing Foot Locker. They ended up missing on their earnings per share by about 50%. So they came in at 52-cent earnings per share versus 97-cent earnings per share expected. So the same thing goes down for Nike, where they miss by 40-50%. This one's trading pretty high, currently at 123.88, compared to a 52-week high of 139. So it's not too far off its all-time highs. And if you look at Foot Locker in comparison, 47 down to 41. So let's see, $6 down from the highs. So if Nike is anything like Foot Locker, I think this could probably come below 119. But my put strike price is 115. So coming down to the 115.34 price level. It really depends on how earnings and revenue goes. If y'all watch my latest video, if they miss on revenue, miss on earnings, my expectations is they would go below, I think, 111. So if that one's right, then that trade should take the max profit. Do I think that the tech market will be in the red after tomorrow's meeting? It depends on what the Fed signals for the future. I think that if they keep their guidance for to 525 Fed funds rate, or 525 to 5.5%, then yes, I do think that the tech market will be in the red just because interest rates will have to go up from where they've been trading. So the 10-year is currently trading at 3.6. It's been in this range of 3.4 to 3.4 for a while, since September, and it really dropped after this bank news hit, right? Because the markets are expecting the Fed to start pivoting because of these bank failures, but I don't think that they're going to. I think that there's a lot of bad actors in the banking industry, like SVB not hedging their positions in their bonds like most banks would. It's pretty standard procedure to buy interest rate swaps, but they didn't do that because they took on the risk and they just wanted to get paid the 1.7% interest that the bonds were paying. So, and they didn't want to, take away from that margin. So, and then you had Credit Suisse, which was in a lot of trouble for like the last 10 years at least. They've been in a lot of money laundering schemes, drug deals, all kinds of shit. And then the Archegos mess a couple years ago. So they were just bound to blow up at some point. I don't think that we should bail out the banks that have just been bad actors for the last couple of years. Let's see. IWM is really seeing the love today, up 2%. Just kind of trading back to where it's been, though. It was down to the 170 lows, and now it's just gapping up with the rest of the market at 177. This one I could probably see going 180 maybe the next couple of days before the Fed, maybe. And it's trading at 177, so that's another 3 over 177. It's another 1.6%. I could probably see that happening by the Fed meeting. If you're going to take any long positions, I think IWM would probably be the best one. It's a signal of risk on, so you are taking on more risk by taking on a bullish position for IWM, but if the markets are going risk on before the Fed meeting, then that would be the best position to be in. Do I keep stocking up on UVXI for a reason? Yeah. So it's the reason being that I think that the Fed is going to be more hawkish by the end of the year than what the Fed futures are predicting. They're expecting them to cut rates, and I don't think that the Fed is going to cut rates by the end of the year. I don't think that it's reasonable to assume that we give up the fight on inflation just because a couple of banks ended up going belly up. I don't think that the Fed is going to do that. So the bond market is going to readjust. The Fed futures are going to readjust, and the markets would readjust to that too. We're seeing a pretty decent disconnect between bonds and the markets too. Really since the beginning of the year. We've seen TLT going from $100 to $105, so up 5%. So that means that people are buying up the bonds. And this is a flood to safety, basically. So if you're seeing SPY going up at the same time, that's not really a flood to safety. Buying into stocks whenever you're at really high valuations isn't safety at all, right? If you look at FANG, for example, all of them are expecting like 0% growth, or they're going to 0% revenue growth for the last year. So I think that tech especially would definitely take the hit. Let's see if I can find that picture right here. So this is the FANG revenue growth percent year over year. The median between all 5 of them: Facebook, Apple, Amazon, Netflix, Google. So, they were doing 40% growth year over year just a year ago, and now that's contracted basically to 0 at this point. So you're trading at higher multiples since these stocks are still hanging around the same price that they were a year ago. So that just induces more risk, and then the bond markets are telling us that we're risk off. So I think it's just a matter of time until that ends up correcting one way or another. All right. Let's check out the iron condors. Currently down by 165. They're going for 70 apiece. 397.81 is the current price for SPY. Yellen is supposed to speak, I think, in 2 more minutes. So that could shake up the markets in one direction or the other. Let's check the 5-minute chart. Looks like we're going to a new daily high at 397.88. So we might need to get out for this iron condor. We'll wait until she starts speaking at 10. Yeah, so this one is TD Ameritrade here. And then Robinhood is the one that I use to execute the trades. Tesla eating up the shorts this morning. Not too surprising, given that the markets are risk on with IWM leading the way. Tesla is currently trading at 192, so getting close to that 200 mark. Let's check NVIDIA. I know this one's been going wild. 263, so almost at the 2-day high of 264. And over the last year, the high was 289. So this one's getting extremely risky. I think it's trading at like 150 price to earnings ratio, even though their earnings has been declining like 30% over the last year. So that another, risk on stock that just fails to give up. All right, we're trading at 398 now for SPY, up 1%. So again, volatility works in both directions. 1.1%. Yesterday we were up around the same. But I don't know, getting down to that gap is looking a little bit less likely for today. So might have to take the L for the iron condor. Currently at 398.30. Yellen is supposed to be speaking now, I think. 10:01. Let's see if I can find the news for her speech. Chewy's up 4% now. Let's see. News for the markets. Pentagon plans to begin Abrams tank deliveries to Ukraine as soon as this fall. So nothing from Yellen yet. Maybe we can pull her up live. YouTube. Janet Yellen speaks at the banking summit. There we are. And she is not speaking yet. So, still waiting on her. Let me pull up the OBS. My MindEye set up. output. Yep. Sound output. There we go. So whenever she starts speaking, we should have the audio for it. Hopefully. All right. Can't do the picture.
I was in a really bad accident. The woman that died was about to be my sister-in-law.
I want my child back.
I don't know how to do this.
Takes work.
A Good Person, rated R, in theaters Friday.
If you can dream it, then bread provides, yeah. Cause bread loves everyone, and it's the type of journey that should be fun. The life you always wanted, time to make it true, cause you deserve it. And bread is the one for you. Bread Financial, the best thing since online banking.
The American economy relies. Thank you very much. Thank you. Good morning, everyone, and thank you. Thank you, Rob, for your leadership of the American Bankers Association. I greatly appreciate the invitation to be with all of you at an important moment. As everyone in this room knows, the American economy relies on a healthy banking system that can provide for the credit needs of families and businesses. American households depend on banks to finance their homes, invest in an education, and otherwise improve their standard of living. Businesses borrow from these institutions to start new companies and expand existing ones. Almost 2 weeks ago, we learned of problems at 2 banks that could have had significant impacts on the broader banking system and the economy. The situation demanded a swift response. In the days that followed, the federal government delivered just that: decisive and forceful actions to strengthen public confidence in the U.S. banking system and protect the American economy. Let me be clear. The government's recent actions have demonstrated our resolute commitment to take the necessary steps to ensure that depositors' savings and the banking system remain safe. Our approach had 2 main pillars. First, we worked with the Federal Reserve and FDIC to protect all depositors in the resolutions of Silicon Valley Bank and Signature Bank. The steps we took were not focused on aiding specific banks or classes of banks. Our intervention was necessary to protect the broader U.S. banking system. And similar actions could be warranted if smaller institutions suffered deposit runs that pose the risk of contagion. I believe that our actions reduced the risk of further bank failures that would have imposed losses on the Deposit Insurance Fund, which is paid for through fees on banks. Second, we announced a new facility to provide additional liquidity to the banking system. The Fed's new lending facility, the Bank Term Funding Program, is designed to help banks meet the needs of all of their depositors. The situation is stabilizing, and the U.S. banking system remains sound. The Fed facility and discount window lending are working as intended to provide liquidity to the banking system. Aggregate deposit outflows from regional banks have stabilized. And as you know, 11 banks, including the very largest and some regional banks, announced $30 billion in deposits into First Republic Bank last week. This support represents a vote of confidence in our banking system. We're continuing to monitor conditions closely. My team and I have been in close communication with many of you, in addition to federal and state regulators, other market participants, and international counterparts. While we don't yet have all the details about the collapse of the two banks, we do know that the recent developments are very different than those of the global financial crisis. Back then, many financial institutions came under stress due to their holdings of subprime assets. We do not see that situation in the banking system today. Our financial system is also significantly stronger than it was 15 years ago. This is in large part due to post-crisis reforms that provided stronger capital standards, among other important improvements. In the coming weeks, it will be vital for us to get a full accounting of exactly what happened in these bank failures. Regulators have already announced a review into Silicon Valley Bank. We are currently focused on the situation at hand, but we will need to re-examine our current regulatory and supervisory regimes and consider whether they are appropriate for the risk that banks face today. We all share an interest in ensuring that the United States remains the strongest and safest financial system in the world. Given recent developments, I think it's important to reaffirm a broader point. Our dynamic and diverse banking system is critical to the American economy. Large banks play an important role in our economy, but so do small and mid-sized banks. These banks are heavily engaged in traditional banking services that provide vital credit and financial support to families and small businesses. They also increase competition in the banking sector and often have specialized knowledge and expertise in the communities they invest in. Indeed, many of these banks have played an important role in supporting our economic recovery. In the depths of the pandemic, Treasury was tasked with getting money quickly and responsibly to those who needed it. So we work closely with many of you to send economic impact payments to millions of families. You also worked with us to deliver advance payments from the Enhanced Child Tax Credit, which helped cut child poverty nearly in half in 2021. And we've collaborated to rapidly deploy assistance to hundreds of thousands of homeowners facing foreclosure. I also know that many of you are working with state governments to inject new financing into small businesses as part of our state's Small Business Credit Initiative. In the prior iteration of this program, lenders with less than $10 billion in assets accounted for 95% of all program-supported loans. Our administration has also been focused on working with mission-oriented banks to put us on a path toward inclusive economic growth. For example, Treasury's Emergency Capital Investment Program has invested almost $8.4 billion in depository institutions that are CDFIs and MDIs. Treasury is committed to ensuring the ongoing health and competitiveness of our vibrant community and regional banking institutions. So to end, let me return to where I started. A safe and sound banking system is integral to the health of the American economy, and we are squarely focused on doing our job. And you should rest assured that we will remain vigilant. I look forward to continuing to work together to strengthen our banking system and our nation's economy. Thank you.
Secretary Yellen, thank you for your leadership during this time of stress and for taking time not only to deliver those important remarks, but to also give us a couple of questions as well.
Sure.
Let me start, I think an obvious one, and that's kind of the path forward. You've spoken about the extraordinary action that the Treasury and the Fed and the OCC and the FDIC took, but you also spoke about, or have spoken about, the making sure we have to understand the root causes of the factors before determining whether further regulatory or policy action needs to be taken. Can you expand on that and kind of give us an idea of what you and your fellow regulators are considering? You know, where do we go from here?
Okay, very good question. So let me just start by saying that our banking system is sound, even as it's come under some pressure. As I indicated, this is different than 2008. 2008 was a solvency crisis. Rather, what we're seeing are contagious bank runs. We demonstrated last week that the federal government is resolutely committed to taking actions that will mitigate financial stability risks where that's necessary. And every step we have taken has been intended to reassure the public that our banking system is resilient and that we stand behind the banking system. The public should have confidence in our banking system, and it's our intention to remain vigilant in the days and weeks to come. And as I said in my remarks, that means potentially intervening if a smaller bank experiences the kinds of difficulties we have seen that pose the risk of contagion. So banks, of course, need access to adequate liquidity when they face deposit outflows. And really, that's the reason, that was the motivation for the founding of the Fed in 1913. So we need to make sure that the Federal Reserve is able to provide the liquidity that banks need. And we see the Fed's new facility and discount window lending as now working as intended to provide liquidity to the banking system. We're monitoring conditions closely, communicating very actively with federal and state regulators, and in touch with you and many of the banks in this room. We see the situation as having improved. Aggregate deposit outflows have stabilized. That's really what we're focused on, but you asked me to look forward. So we don't yet have all of the details about these two banks. As I said, we know, though, that this is a very different situation than the global financial crisis, when banks came under stress because they had subprime assets that lost value, and that was a situation where there was a shortage of capital. We have post-crisis reforms that have greatly improved capital standards and other important improvements in supervision. So I think there will be time, it will be necessary, but there's time to evaluate whether some adjustments are necessary in supervision and regulation to address the root causes of the crisis. I don't want to speculate at this point on what those adjustments might be, What I'm focused on is stabilizing our system and restoring the confidence of depositors. But it has been announced that Vice Chair for Supervision, Michael Barr, will undertake a thorough review of the failure of Silicon Valley Bank with an eye to determining next steps. So there will be time to consider whether some adjustments are necessary. Now we need to stabilize the system and restore confidence in its soundness.
Thank you for that answer, and also thank you for your timely comments around deposit insurance and smaller banks, and for emphasizing that in your answer. Thank you. Second question I had for you, Secretary Yellen. You know, bankers in this room today represent banks from all across the country, all across the size spectrum, from small community banks, mid-sized banks, regional banks, money center banks, globally active banks. It's the entire U.S. banking sector. Can you speak to the importance of kind of the industry working together and unity, and what banks of all sizes should be focused on right now to reaffirm the faith that customers have placed in them?
Absolutely. So let me just start by saying that community banks play a vital role in providing credit and financial services to small businesses, to farms, to consumers in thousands of local communities around the United States. And they can provide services that larger banks can't replicate because they know the special features of their markets and the people who are active in those communities. And I think the most important thing for all of those banks is to remain focused on serving the needs of their communities. We have an economy that remains very strong and vibrant. We have seen more new businesses formed in the aftermath, the last couple of years in the aftermath of the pandemic. And those businesses and households need support, and that is the prime business of community banks. So I guess I would start there. The community banks in this country, we know, are strong and resilient, and I think banks need to reassure their customers that they are strong and resilient, and the government needs to do exactly the same thing. And I believe we do have a very strong and resilient banking system, and all of us need to shore up the confidence of depositors that that's the case. So let me just say again that all of the actions that we have taken are designed to bolster confidence in the banking system and to demonstrate that we are ready and prepared to take the steps that are necessary to ensure depositors that the banking system and their deposits are safe.
Thank you, Secretary Yellen. And in fact, my own, as I opened the conference right before you arrived, talking about the strength and the resiliency of the industry and confidence in the industry and the health were exactly the themes that we used to kick off this conference. We're aligned certainly on that. I know your time is tight and you have 1,000 places to go, but as a Treasury vet myself, I have to ask you about another really important issue around financial stability. And so before the stress of our sector over the last several days, we were looking at the need to raise the debt ceiling, something you're very familiar with, sometime this summer, given the associated economic risk of not to our markets, to our economy of not doing so. Given the situation we're now in, the events of the last 11 days, how important is it for Congress and the administration to resolve this debt ceiling standoff, acknowledging that people are talking about current events, and to act swiftly to ensure the full faith and credit of the United States? Well,
I consider it utterly essential for Congress to act to raise or suspend the debt limit. I really worry about waiting until the last minute to do it. What we saw in previous debt limit impasses, and I'm thinking especially of 2011 when it took until the last minute to be resolved. the government's credit rating was downgraded, and that's the first time that's happened in the history of our nation. And that's something, this kind of brinksmanship with the debt limit, I think really imposes substantial harm. It raised the cost to the United States of borrowing, and in turn, the short-term borrowing costs of millions of consumers and small business owners. And we have the safest and most liquid financial system of any in the world. The dollar serves as a reserve currency. U.S. Treasury securities are the go-to asset whenever there are concerns about anything, any economic or financial developments around the world. And this is something that we should prize and is a great benefit to our country. And nothing should be done to throw that into danger. And so if there were a failure to raise the debt limit, I believe it would be absolutely catastrophic and take an economy that is performing very well. We've had the fastest recovery from a downturn that we've ever seen, and the fastest recovery of any nation around the globe. The unemployment rate is near a 50-year low. The economy is doing well, and it would threaten all of that. Now, that said, having a sound fiscal policy and making sure our country is on a sustainable fiscal path is vitally important. And this is a priority for the president. He has just issued a budget that contains deficit reduction in order to make sure that our debt to GDP ratio remains stable, and that net interest costs that the government pays remain well contained and manageable. There are different views about what we need to do to be on a sustainable fiscal course, and the president has made clear that he stands ready to address fiscal policy. But importantly, that's a conversation that needs to happen over time and in the appropriations process, and not through the threat of forcing a default. Preventing a default, making sure that the government pays bills that Congress has already committed us to, this is simply a basic responsibility that Congress has to the American people, and it's something that needs to be done without conditions. I guess I would just mention one further thing in this regard. It's something very much on my mind. I sometimes hear it suggested that Treasury can and should prioritize payments. If Congress doesn't raise the debt ceiling, we go through a list, pay some things first and other things later. In that regard, let me just say, Treasury makes absolutely millions of payments every day, and our system is built to pay our bills on time, not to delay bills or try to sort payments into different categories and to pay some ahead of others. And there's a reason that Treasury secretaries of both parties have rejected the idea of prioritization as a risky and dangerous idea. It's never been done, and prioritizing is nothing other than default by another name. So I believe it's essential that Congress raise the debt ceiling and that they do it promptly in order not to inflict a truly catastrophic wound on our economy and financial system.
Well, Secretary Yellen, our time is up. Thank you for your leadership at this time, and thank you for your timely comments today. Please, ladies and gentlemen, please join me in thanking Treasury Secretary Janet Yellen.
Thank you very much. Thank you. Thank you.
So that's the end for that. Let me turn that down. So basically, just kind of reiterating what was said already in the press statement that we got, the news that we got. So not really any sort of details as to how they're going to do it, but reiterating the news. So SPY ended up coming down from 397 down to 396, and currently catching some support at 396.50. So we ended up slipping below 50 RSI. So based on the RSI, we have gone bearish, and I do think that we are getting closer to filling the gap down to 393.66, but that's still another 0.75% down. So SPY would end up, being flat for the day, which it could happen. Currently, the iron condors that I have are down by 70. I think I'm going to keep on holding them. And then I also have the put debit spread that I opened right before this. That's up by $24. I ended up opening these at 36. I think I overpaid for them. Now they're going for 38. I opened 8 of them, so currently $16 profit. But we're getting closer to that 395.25 mark. I think we'll definitely get there. And then getting back to 393.66 or closing that gap could take another couple of days. But we shall see. Currently at 40 for the RSI, so definitely bearish there. The MACD ended up turning around with the blue line going in the negative and the yellow line still positive at the moment, but that would be the start to a bearish MACD cycle. This is a 5-minute chart, so it is a shorter time frame. This will be more like a day trade kind of setup, but that would mean that we'll probably be bearish for the rest of the day, or until any other kind of crazy news comes out, which could always happen these days. Seems to be a plethora of news. Big red candles for XLF. Yeah, I think KRE is probably coming back down from the highs because, we expected some sort of, I guess, solution, but we didn't get any details as to what the solution is going to be. We just got basically what we got from the news. The headline of we're going to look into a way to backstop the small banks in case they have a bank run. I mean, it's basically what she said, and then she kept reiterating the statement, our banking system is resilient. If you took a shot for every time she said that, then you would be drunk as hell right now. But yeah, SPY currently trading at 396.53. QQQ at 307.36, down to only 0.5% up this morning. IWM is still up 1.8%. So watch out for IWM. If this ends up rallying again back to like 177.50, then the rest of the market could be led up by that. Again, this is risk on, risk off. So if IWM is going up, that is risk on, which means that the rest of the market would probably follow along. Holding UVXI until FOMC? Yes, I sure am. Let's see. UVXI, I think UVXI ought to have caught a little bit of a bid. Actually, no. Still trading at the same price as this morning. At 5.55, currently at 5.50. Did end up bottoming out at 5.47 and peaking at 5.56. So not really trading too volatile this morning like we've been seeing for the VIX. which is currently at 22.24. Again, my estimate is that the VIX will probably be between 32 and 35 after the Fed meeting, and it might take like a couple of days for that to be realized, just because the Fed meeting is at 2 o'clock, and 2 hours probably isn't enough time for the VIX to go up, 40%. But if you give it like another day, maybe 2, I think that could happen. Do I have any calls open for UVXI? No, I don't have any calls. Personally, not a huge fan of trading options for leverage ETFs. So you can. It's just that, you're having double the time decay. So if you set your expiration date for like 3 weeks out, you're going to have the theta on top of UVXI losing value if the VIX doesn't move anywhere. I mean, you could, make some decent money out of it. Say if UVXI does go up by 40%, as VIX does, that would lead it to 770. Right now, you're paying $9 for that. So there's, a lot of opportunity in that, obviously. Those would have 70 cents of intrinsic value. So you would turn this 9 into 70 if that ends up playing out, obviously. Could be totally incorrect. The Fed might end up backing off on their interest rate hikes. I think even then, though, there's still some bearish tilt to that. I don't know if there's really any kind of bullish tilt to this Fed meeting. If they end up pausing rates, then they're capitulating to the market and letting inflation ride. I mean, you have the no landing narrative that people have been pitching, which could be taken as bullish, but if inflation is eating away at, everybody's buying power, then the US dollar is going to lose its reserve spot, because who's going to want to trade with something that just continues to lose value? That would mean that commodity prices, oil, and everything else that the dollar is traded on would be higher in price. So don't think that would be a good situation. But if the Fed does end up, I think the base case is probably the best, like the 25 basis points. And then if they end up cutting their expectations from 5.25 to 5.5%, which was the last summary of economic projections for the end of 2023, if they end up cutting that slightly, say to like 4.75 to 5% instead of 5.25 to 5.5%, I think that could be probably the most bullish situation. That you get a small decrease in the federal funds rate, and that would actually suggest like a pause. So keeping the interest rates at these elevated levels and just letting inflation erode over time as, these higher interest rates take effect. I think that would probably be the most bullish case. Are we going to see a big drop tomorrow after the FOMC meeting? My guess is yes. I think that the Fed is going to go either keep their interest rate projections for the end of 2023 or go higher. So I think that the disconnect between that and the Fed futures is going to lead to a huge increase for the interest rates for bonds. The 10-year is currently at 3.5 or 3.6 almost. So I think this would probably go to like 3.8 again. The 2-year would probably go higher. I'm not sure what the 2-year is at. Last I checked, it was at like 4%. 2-year yield. 2-year is currently at 4.11. I think this one would probably go to 4.5. Probably even higher, like 4.6, 4.8. So if you get that increase in the yields, you're going to get people pulling back probably out of their, especially tech positions, high growth positions. So I think that would probably lead the markets down. Systemic inflation. Yeah, we have systemic risk and systemic inflation. what if I sell a put and it didn't get filled and the stock goes up for Robinhood? Then you get to keep your cash if it expires out of the money, and you get to keep the full credit that you received. Let's see. Treasury Secretary Yellen says ensuring fiscal sustainability is a priority for President Biden, talking about the debt limit and raising the debt limit ahead of the deadline, which I think is for like July or August. So they still have a long way to figure that out. Says the banking system is sound, despite recent pressure, committed to taking the actions that will mitigate financial risks. Yeah. Super sound banking system with everybody pulling their money out. That screams sound banking system to me. But yeah, it looks like SPY just wanted to catch a bid at 396. Did it twice now. Ended up bottoming there twice. Currently at 41 RSI, so still bearish. But this one could end up neutral maybe by the end of the day. Maybe sticking around 397. Full faith and credit. Yeah, because the U.S. is so great off fiscally, right? $31 trillion of debt. 120% of our GDP. And then she was talking about how Biden wants to stabilize the debt to GDP ratio. Like, it is at 120%. There's no way of stabilizing that. That is a mess. All right. Looks like IWM could be going up 1.9%. So that one's catching a bid too at 176. That's where they wanted to buy that. So this one keeps going up. Expect SPY to go up with it. But my guess, below 50 RSI, we're still bearish. Oil is actually up 1.7% today. Dollar is down, so usually those trade inverse with one another. Whenever the dollar goes down, oil goes up in the reverse, or sometimes you'll see both of them going down at the same time, which is recession fears. So I guess the recession fears are off today, with oil up 1.7% to 69 a barrel. Last couple of days it did fall to 64, but this is also down from 80 a barrel just a couple of weeks ago. So still down pretty heavy for the price of oil, which is a sign of a coming recession, just based on lower demand for oil. Any apps or websites to save or record trades for every day? I'm currently making an app that will do that, but not sure when it's going to be out yet. I'm hoping by the end of March, but we'll have to see. I use a spreadsheet to track all of mine that I've developed over the last couple of years, and gives me a bunch of different data on my trades and what I can kind of improve about them. Like if you look at February log, it tells me how much money I made or lost on bearish trades, how much money I made or lost on swing trades or day trades, the win rate, average win, average loss, things like that. And then these are supposed to be tags that I sometimes use, sometimes don't. And then, let's see, it'll just give me like my weekly profits and then my calendar that I have. TraderSync, yeah. TraderSync That's one of the competitors that I'm going after. TraderSync, you have, what else? Stock Trading Journal. TraderSync is the most popular. What are the other ones? TraderView is one of them. There's a couple other ones that are on the market. They're all the same price, though. They're all like $50 a month. Yeah, it's $50 a month for TraderSync. I think it comes with like a 1 month free trial or something like that. And then you have Wingman. Wingman is a pretty popular one. Wingman.com or wingmantracker.com. But I'm not a huge fan of the designs of either of these apps, so I made my own, which will be hopefully coming out by the end of the month. Oh yeah, I mean I'm gonna outcompete them in terms of user interface, definitely, and then the offer of the AI, artificial intelligence, and making that into sort of an options coach that'll help traders like figure out what's going wrong in their trades and guide them to be a better trader. So I think that's definitely the big addition that I'm going to have versus Wingman, especially with their user interface, and then TraderSync. They don't have any sort of, I don't think any of these apps really have any AI incorporation into them. So it'll be a nice little addition. Outcompeting is my middle name. Yeah. Let's see. Yeah, you have TraderSync, you have that one. There's one optiontracker.io or something like that. That one's actually probably the best one in terms of user interface. That's the one that I need to compete with on user interface. What will the app cost? I'm guessing $50 just because that's the market price for it. Everybody else is listed at 50, so just come in at market price and give a little bit additional with the AI versus the competition not giving that. Let's see, trading at 396.69, so up a little bit. Getting close to 397 and close to 50 RSI. IWM is above 52 RSI, so that could be the rally. Potentially. All right. These are trading for 59 apiece, so these are down 100. I was expecting us to pull down to that 395.25 mark, but might not make it all the way there. There is some resistance that it's coming up on right now. Between this 396.70 and like 397. It's kind of a range of resistance. All right. Let's keep watching for 50 RSI here. And then that might be our cue to get out for the Iron Condor at a loss. QQQ is only up 0.5%. So that one's definitely the laggard today. VIX is down 9%, down to 21. Shocking that this is below 22 before the Fed meeting, but you got Treasury Secretary Janet Yellen quelling the fears of the bank run. So, not too surprising, I guess. China's Xi says, I am ready to collaborate with Putin on ties. Oh boy. The East ganging up on the West. U.S. Treasury Secretary Janet Yellen, despite recent pressures, banking system is sound. We already read that news. So, no news coming off the wire right now. Besides the VIX hitting the lowest level since March 10th. Basically before this banking crisis started. Kathy Woods is saying that Tesla is one of the biggest beneficiaries of AI in the form of autonomous taxis. Tesla can drive prices down because costs are moving down for AI. They've definitely been making some progress on FSD, I would say. Their latest version. I've seen a lot of videos with zero intervention, but not sure how much longer you would need to get from level 2, I think that they're at right now, to level 4, and then have that full clearance for having the robo-taxis. I still think that could be maybe a couple years out. Depending on regulation, too. Like, if regulators decide to attack Tesla, that wouldn't be too surprising. And they could slow that down another couple of years, probably. Everything's just kind of stalling out right now. IWM is trading at 176.70. So still up that 1.9%. Not reaching the new highs at 177.50. But not breaking down either. I hope we don't get a boring day. Trading between 396 and 397. That would be really boring. Let's see. Am I dollar cost averaging into Tesla? Not right now. I was dollar cost averaging into them whenever they were trading in the low 100s, like below 150, but after they went to 200, I stopped dollar cost averaging into them. So instead of putting my money into that, I was putting my money into Fulgent, currently trading at 32. And then QQQX. So this is a cover call ETF that pays 8% a year. And I have, I believe, $2,000 worth of QQQX. And then for the other one for Fulgent, I have 6,000-ish in that. And then for Tesla, roughly the same, like $6,000 that I have for that. Drop starts around 11 Central Standard Time, It's Shark says. What option should I buy for SPY? I ended up buying a put debit spread for a couple days until expiration, just assuming that SPY is going to fill that gap to 390. 393.66. that's probably my best guess for the market in the next couple of days that we're going to fill that gap. Currently, we're trading at 396, so you are paying more than if you entered it at 397, like myself, but still think that's an okay opportunity. What is QQQX? QQQX is a cover call ETF for QQQ. So what they do is they buy like 200 shares of QQQ and then sell cover calls on 100 shares. So sell one cover call. That way, if QQQ does end up going up, they don't lose all of the gains, essentially. So if you compare QQQX over the last year, a high of 28.85, currently trading at 23, so down by $5, or about, let's see, 5 over 28, down by about 17%. Whereas if you look at QYLD, for example, this one is down from 21 to currently 16. So that's 4 over 21, about 19%. So this one's going to lose value more quickly than what you'll see out of QQX, especially whenever the markets start going up. It's not going to get as much of the benefit from the rally. If you look at like longer time frames, say the past 5 years, this basically traded flat before we started this bear market, right? It started trading at 23, and by the end of 2020, it was trading at 22.5. Whereas if you look at QQQ, this one went from trading at 160 to a peak at 396, and then QQQX started at, I think this one started in 2018, so it doesn't have the full 5-year time frame, but it started at 24, peaked at 31. So at least there was some gain that you got out of it during the bull market rally. Whereas with QYLD, you didn't experience really any of that. But you do get a higher pay with QYLD. With QYLD, you get 12% a year. And with QQQX, you get 8% a year in income. Robinhood wants to label you as a pattern day trader. Is that necessarily a bad thing? If you have less than 25,000, then you can't trade for 90 days. If you have more than 25,000, then it really doesn't matter. The only thing that it matters if you're over 25,000 is that you're not going to get the money market fund where they give you 4% cash back or 4% APY, right? Instead of getting that 4%, you're only getting like 1.5% or something like that. But if you're under 25, then you would be, you couldn't trade for 90 days. You could always switch to a cash account though. So if you don't trade spreads, then you don't really need a margin account anyway, and you could trade with a cash account. But if you do trade spreads, then you need a margin account and you need level 3 options. So that's why I keep my account over 30,000, even though I don't use most of it. Like I have 21,000 just in cash for this account, just so I can make as many day trades as I'd like, and I don't have to worry about getting barred from trading for 90 days. All right, looks like we're slipping. IWM is down to 1.6% positive instead of the 1.9% it was up earlier. So might be able to take some profits for the SPY Iron Condor today, hopefully. Getting real close to the lows. if you're aggressively trying to grow your account, what percent would you use? Both under and over 25. So if you have less than 25, I would say, so my account size is 30 and I use up to, I think, 7,000 for options. So for me, I'm using roughly about 20% of the account for trading options. I try to grow at a pace of, let's say, I want to make like 1,200 a month usually is what I'm aiming for. Out of 30,000 total, it's like 4% a month. So I would say that's pretty moderate growth. 1% a week is nothing to really scoff at. A lot of people can't do that, and you will see like large fluctuations in your account depending on how much risk you're taking on. So it's hard to get like that consistent, but I would say about 20% of your account over 25. If you're less than that, it's really hard to say. It really depends on your risk tolerance too. Like if you're more risk tolerant, then you could do like 50% of your $30,000 account. But personally, I only have enough guts to do 20%. Yeah, definitely ruins the good 4% APY or whatever it is right now. I think that's, last I checked, it was like 4.2% or something like that. Something high up there. And then under 25, you would probably want to go higher, just because you don't have as much risk or as much to lose. But if you're not making enough income to make up for that, then you would probably want to go lower with your account and how much you want to use for it. Like for me personally, I make, between my wife and I make about 5,000 a month. She makes 3,000 a month, so we make about 8,000. So, and I only use probably 3,000 to pay my bills, so we save like 4,000 or 5,000 a month. So, that means I can take on more risk since my account is only 30K. If I'm making 20% of that in income, then I can replenish that pretty quickly. So I can afford to take on more risk. Should I buy a put option expiring for today? I'm not a big fan of 0 data expirations. I've stopped trading in them in the last couple of weeks personally. I would extend the expiration date to like 1 to 2 days out, and then I would think that we would probably go down to 394. So look for a put option with a break even around 394 in the next couple of days, and I think that could probably work out for you. Do I have a day job besides the YouTube channel? No, I do not. And then writing down and monitoring all the stock market news. But a traditional job, no, I do not have. No, not in trading. Between the YouTube channel, the Discord, and trading combined, all three of those, I make 5,000. Let's see. Drive. All right, yeah, so I made 3,000 in January, 4,000 February, 2,500 so far this month. So I guess 4,000 instead of 5, but yeah. And then breakdown of that. Last month I made 1,500 through YouTube, 1,200 through Discord, and then 1,200 trading. And then this month has been 800, 900, and 800 so far. Do I think we'll see a high for UVXI tomorrow? I don't think that tomorrow we'll get the high for the VIX. I think the day after is when we'll get the high for the VIX. Full-time stay-at-home dad. Yeah. Got to take care of little Eleanor. She is my full-time job. Do I draw money from the trading account? No. I do not have to draw any money, so I just keep everything in there. So starting, or it's at 31,000, and I don't take anything out of it. I could start taking some out, but I would honestly rather keep my money in the broker and just add up the buying power instead. Because, I mean, if I transfer it to my checking account, it's only going to pay me like 0.01%, whereas Robinhood's going to pay me 1%. I could put it in high yield at, 4% or 4.25% from Marcus, but I would rather just keep it in the broker myself. So your disposable income only come from YouTube and Discord. Yeah, I mean, I spend probably $3,000 a month, and between YouTube and Discord, I make that. So anything that I make from trading would be extra for me. What's the yield now? Right now, 4%. I think so. Let's see. Marcus. I use Marcus by Goldman Sachs. And they are currently paying 3.75% actually. So they lowered their rate. It was 4% before, and now it's at 3.75. Let's see. You could probably find a better one. Let's see. High yield savings. You could also put it in like CDs. I know CDs are probably paying more. But then you have to lock up your money for a year. Can't access it at all. Let's see. Yeah, so it lists Goldman Sachs at 3.75. SoFi is paying 4%. Citizens is paying 4.25%. So that's the highest rate that you're going to get is from Citizens right now. And then Marcus is paying 3.75. But I think that yield has actually pulled back from recently. Maybe it's based on the Fed pulling back on interest rates by the end of the year. So that could end up going back up tomorrow probably. It seems like these yields are just so volatile, even for the banks and the interest rates. But, given that we're at higher federal funds rate, much higher federal funds rate, that's kind of to be expected. Still at 45 RSI. Not moving much at all. Let's see, this is down by 65. I really hope we don't trade between 396 and 397 for a long time. That would be annoying as hell. If you were to eye Tesla, where do you think it goes by Friday? I think it stays below the 200 mark is my best guess. What price level I would expect it at, that's probably to be determined by tomorrow's Fed meeting. Like if they come in way more hawkish than expected, I would see Tesla probably pulling back to easily below, yesterday's levels in the 180s. So probably down to the 170s, like 178 would be my guess by the end of the week if the Fed is more hawkish than expected tomorrow. But it is trading, up 4% today. They did have credit rating increase. I don't know what you would call it, by Moody's, where they aren't a junk bond anymore. So that means that more people are able to buy their debt, their corporate debt, so that it ends up in them having more funding. So Tesla is going up on that this morning, up 5% today. Let's see. Tesla deliver. Oh, they're also having their Q1 sales. They had Q1 sales for China. And they should have the Q1 sales for the world by the end of this month. I think they usually release on like between the 1st and the 5th. So watch out for that one too. All right. We're just slowly just sliding away. I think if we go above 50 RSI, that might be my cue to get out of the Iron Condor. Haven't reached it yet. Russia's C banks has established standards of mandatory reserve requirements for different currencies, encourages banks to change their forex liabilities towards currencies of friendly countries. New rules come into force on April 1st for all credit institutions in Russia. Gotta love foreign relations. We're edging on 50 RSI. We're getting there. And I still got leverage to the downside in case we do end up falling after we go above 50 RSI. So not too worried if I miss anything on the downside. Just worried about losing on the upside here with this Iron Condor mostly. Since it expires today, it's going to be more volatile too. All right. Got 5 of these. I opened them at 38. $48 RSI. So close, but so far. IWM is making its way back up to 1.8%. So it's almost back up to that 1.9% mark that it keeps getting rejected at. We're at around 177. All right. 5.8. Now it's going for 60. Yep. Just crossed 60 RSI. I'm going to place the order for 58. Just in case we get a little bit of a pullback here. No. All right. IWM is back to 1.9%, so that's leading the market up again. But yeah, I'm just going to leave my order in at 58 and see if we get filled there. Might have to update it for 60 if we go to 397. Could end up just trading flat here too. Another strong possibility. All right, we're down to 396.77, down to 50.8 RSI, so we might end up losing 50 RSI. Let me replace the order. Jeez, these went up to 62 now. Not sure who's paying 62 for them, but all right. So that 397 mark is where we're looking. IWM is back up 1.9%. Ugh. Gotta love iron condors in the bid-ask spread. Always the worst. Yeah. Just went above 397, so I'll replace the order for 60. No fills at 60. Do I sell a put or buy a put? I would be buying puts right now for 394, assuming the next couple of days. We're holding that 397 mark right now. Let me scroll over. What's the safest option to buy? Worried about theta? How long, in your opinion, is the best days to expiration? I think the best days to expiration is like 2 to 3 weeks out at this point. I think that's really kind of the sweet spot that I've been finding for the market. But I also use spread options, which kind of helps with the time decay too. But I think, 3 weeks until expiration would be good enough to where you're not going to see so much time decay in a couple days worth of trading. But if you're trading like weeklies, or if you're trading, 0 day to expiration, obviously the time decay would be awful for those. Damn. SPY is just continuing on up. 397.23. IWM is up 2% now. QQQ up 0.6. And they just don't want to fill my order at 60. So, gonna have to go higher. Unless we slip. Also possible. Let's see, the bid is 61, the ask is 68. I'm going to go with 61. I'll go with the bid price. All right. Seems like we could get filled on this one at 61. There we go. Getting close to 397, so that ought to fill it. That ought to do it. Oh, yeah, 397.02. I'm surprised that didn't fill. Alright, let me replace the order. The bid is still 62, even though we dipped down to 397. That's a bit high. Alright. I think this is the last order that I'm going to place at 62. I think going anything above that is just too much at the 397 mark, so I'll just leave it in. Do I offer trading lessons? I have the one-on-one coaching. Let's see. On Calendly. Let's see, everything options, one-on-one options coaching. So you can check that out. And then other than that, just the Discord where people can come and ask questions about options and then follow the trades that I make too. Probably going to start working on some educational content in here too. We'll see. Got to come up with a decent plan for it first. All right, 397.17. So we're just kind of balancing right above 397. Still got the order in for 62. I think this one will be filled. No, every time we hit 397, it just bounces right back up. Lots of buying supported there. Let's see if there's any news coming in. We already know about the VIX hitting the lows. Putin says could visit China this year. Bank CEOs discussing future outcome for First Republic. 1 to 4 month time frame for FRC sales fails. Let's see, FRC. See what they're up to today. Still up 41% even after Janet Yellen didn't really give us any updates on how they're going to secure the funds. Currently trading at 17.26, up from 12 yesterday. Still not getting filled at 62. This is just getting ridiculous at this point. Just getting ridiculous. I think I'm just gonna hold it closer to the end of the day. The prices are just unreasonable for right now. There we go. Doesn't take much, but these prices are really elevated. Let's see. IWM is still up 2.05, so yeah, probably best to get out. And then I'll keep holding the puts that expire in a couple days. That'll make us money if it keeps on falling to 395. That next support that I'm looking at, a 395.25, should be profitable. But they are just brutal. Brutal with this bid-ask spread at 61 and 67. Jesus Christ. A 5 cent, 6 cent bid-ask spread for SPY is ridiculous. Definitely losing steam up here, though, above 397. But RSI is looking bullish. MACD just went positive for the blue line. So if we get that yellow line crossover, that would be a bullish MACD cycle. Unless everything ends up pulling back. Gotta love the anticipation. All right. Moving down now to 60 at the bid, 61, 65 for the ask, so we ought to get filled pretty quickly here. Yeah, 64, and now SPY's below 396, 397, so ought to be filled. If not, then something's up with this trade. There we go. All right, so close out of the position. One. Oh, crap. There we go. Did it give me the price? Yep, 62. All right. Closing options alert. Just cut losses for the SPY Iron Condor expiring today, 3/21 at 62 each. And I opened the, let's see, 388, 389 to 396, 397 strike prices. All right. So that's all the trades that I got for y'all today, and I will catch y'all tomorrow at 9:30. I'm gonna keep on holding that put debit spread for probably tomorrow. Still think we're gonna fill that gap down to 394.60, so that ought to make this profitable. But yeah, I'll catch y'all tomorrow at 9:30. See you, everybody.